Hey, AxView here. Welcome back to another episode of Ax Ed. Today we're going to discuss credit scores and how you can increase your credit standing so that you can achieve better financial ability, like purchasing a home in the future, a car, or more. You've probably heard of a FICO score. It's the primary way that banks can tell if you're a good lender. Can you be responsible with credit? So they take account of a couple measures to ensure that you can be trusted with money in the future. A good FICO score, say 1 over 700, can open up many financial doors for you, like purchasing a home or a car with a low interest rate and many other financial opportunities that can grow your net worth over time. FICO scores are not only important for purchasing assets, but employers can view them and even rental landlords so that they can know that you'll pay rent on time, for instance. So let's dig into what comprises a FICO score so that you can increase yours and achieve greater financial success in the future. The most significant factor in a FICO score is your payment history. So make sure that you're always paying your accounts on time and make sure you always pay at least your minimum payment. The next factor, about 30% of your FICO score, is based on the amount of credit that you're using. So maybe you have $10,000 in a credit limit, but you're using all of it. So you're maxing out your credit cards. Well, lenders don't like to see you using all your credit. They want to see you use some of it so that they can see that you use your credit responsibly and they'll know that you're going to pay off all of it in the future. The key number here is to not go above 30% of your credit limit. So what's called a credit utilization ratio. So don't use more than 30% of your credit limit at any given time. That will lower your FICO score if you go above that amount. So while I said before to pay at least your minimum balance, don't keep accruing interest on debt so that your total credit outstanding reaches above 30% of your total credit limit. The next significant factor in a credit score is your length of credit history. So don't wait forever to get a credit card. And don't say that you don't want to use credit because you can pay everything with a debit card. Use the credit so that you can establish a history. And don't close out old accounts because those oldest accounts are your longest term of credit history. Related to this is another factor of the FICO score, is how many credit cards are you opening over a given period of time. What are called hard or soft inquiries are credit checks. Every time you open up a new credit card, that hurts your FICO score for a given amount of time. So while you want to expand your credit limit over time so that you can lower your credit utilization ratio, you don't want to open up too many cards too fast. We already talked about the dangers of closing cards as well. The last piece of a FICO score is the credit types that you hold. So you might hold student loans, car loans, a mortgage, and credit card debt. Banks like to see that you can hold multiple types of credit at once. This is just a small percentage of your FICO score, but it's still an important one. You see, credit can open up many financial doors for you, but you have to treat it well. You can't max out your credit cards every month if you want to build up a good credit score over time, but it takes responsibility and care every single statement so that you're always paying on time, using the right amount of credit, and building a good credit history.